What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. Welcome back to the channel. Hope you're having a great day today. Now, I'm not making a video specifically on the charts today. It is Friday, and we've talked about the significant levels for Bitcoin. We've talked about the potential trouble that could be ahead if we do fall to some of these lower levels. And right now, there are a lot of people who are scared. They are fleeing from the markets. They're depressed. They're acting like Danny Torrance, right, from The Shining, right? You like this orange shirt for Bitcoin, guys? But seriously, I need to break down some statistics for you right now. We're going to go over some very important data, okay? Everyone says this is the worst thing that's ever happened. This is like nothing we've ever seen before. This time is different. This time we're going into a 10-year recession, and there's just no place to hide. You no place to put your money, right? We're going to break it down, guys, and I'm going to tell you why this is actually potentially the best opportunity of a lifetime for generational wealth building based on historical data. Now, this is not data of Bitcoin. This is data from the actual stock market dealing with recessions and bulls and bear markets that we've had in the past. Now, I actually have my laptop pulled up in front of me, and this is a chart from First Trust. And you can see right here that based on the data, the average bull market period has lasted about 6.6 years with an average cumulative total return of about 339%. So that's like a 3.3x, right, from bottom to top, roughly. I know that's nothing in crypto terms, but listen, let's keep going. Stick with me here. The average bear market period lasts about 1.3 years with an average cumulative loss of about negative 38%. Now, keep in mind, this data is going back all the way to 1926. So this includes, recessions and depressions in the 30s and all these other things that we've had, right? Stick with me. Let's go on a little bit farther and see what else we have here. So there's been about 26 bull markets since 1928, according to Ned Davis research. We have seen the same number of bear markets, right? So there's an equal number of bull markets and bear markets. You're either going up or you're going down, right? That's pretty much what you're doing, or I guess you could say you're chopping sideways, but nevertheless, that's about what we've had over here in the US, right? So this does beg the question. If we do look at these statistics, how close are we actually potentially to the end of this bear market on average? Now, I'm talking about traditional stocks, and I understand the Fed is raising rates. It's different this time. We're going to get to that. But as you can see, the bear market in the S&P 500 was actually confirmed on June 13th. That's, obviously this year. But the markets did begin to slide earlier in January. So if we do take this date as the start of the current official bear market, then the average bear market of about, let's say, 289 days, or, if you want to go with the other statistic of being about 1.3 years, roughly, that puts us ending the bear market on average by sometime at the end of next month. Now, I know that sounds crazy. It's not that could never happen this time, right? It's totally different, K-Dub. We're going into a recession, right? Well, let's discuss recessions. Let's talk about that. So we have the NBER, right? And they use a series of monthly economic indicators rather than using just GDP data. But they say, you know what, even if you look at the GDP data, the story is roughly the same. So since 1945, there have been 10 recessions identified by the NBER. 10 recessions since 1945, and yet we have consistently seen Fed pivoting over time. We've seen inflation eventually moving back up no matter how much they try to tame it, or even hypothetically, if inflation was to just remain level, right? We've seen that before where we've had some solid 2%, 3% just for, years at a time. What did we see? We saw that investors went back into things like risk assets, like equities, like stocks, things of that nature, right? And the biggest thing that you have to realize right now is that the world economic system ultimately is built on for-profit companies, right? And the majority of these companies are actually, for example, as they put here, public markets, like they are listed in public markets like the New York Stock Exchange. So the US listed companies make up about 60% of the global stock market. Now, do you really think that Powell and friends are going to let it get that bad, knowing that 60% of the global stock is pretty much US listed companies at this point, right? Now, we've already gone over lots of other data, including the fact that if they do continue to raise the rates, that means people are going to be reporting losses this year. And if you're reporting losses, that means you're not paying taxes. And how do these guys make their money? They make their money through taxation, right? Same thing if we do have jobs start falling off, right? Let's say we have unemployment start to skyrocket. Well, the less people that are in the workforce, the less people that are making salaries that have checks. And what do you do when you get these checks? Well, they take a portion of it for taxes, right? That's another thing that they're not going to want to do. So inevitably, the Fed will have to pivot. And if you take this chart that we just spoke about right now and consider the average returns being about 3.3x, and we know in crypto it's much, much higher than this, right? If the S&P does 100%, you've seen Bitcoin do 400%, 500%, right? 1,000%, 20x we did in 2017, right? And you look at the opportunities right now, where were the most opportunities? Where was the most money made historically? It was made in the bear markets. Who made the most money in the biggest run-up after the 2008 financial crisis? It was the people that bought those bottoms, the people that weren't scared to hop in, take a risk, right? All the people that are kicking themselves right now, including guys like me who didn't even pay attention to things like that back in 2008 and 2009, realize the immense profitability of getting into something so early, right? Look at all the people that got into Bitcoin back in 2013, 2014, 2015. I bought my first Bitcoin in 2017. Some people say that I got lucky. Let me tell you something. There was no luck involved, my friends. It was a very, very tough road. I had bought my first house. I didn't have any money in the bank. And I got some Bitcoin at around $2,000, right? This was back in May of 2017. I hodled all the way up to the top. And guess what, guys? I hodled all the way back down to the bottom again. And I will tell you what, my portfolio was not looking good. It almost felt like, why did I even do this? I felt like such a waste of time. But I had conviction in Bitcoin. I believed in it. And I understood market cycles. So what did I do? And I'm not recommending anybody do this. I continued to dollar cost average the whole way up and the whole way down. Now, I'm not saying that that's the best strategy for you to dollar cost average, but what did I do? Well, my house went into foreclosure. This is a true story. I sold all of my cars. I rode a bike. I rode a bicycle for 2 years. And I made crypto videos the whole time, and we were investing in all different projects. And the next time we came out, we did even better because we were smarter. This is officially the third time that this is happening. So, of course, it could be longer. I'm not saying that it has to be, the typical 1.3 years. Maybe this is the exception. Maybe this lasts for 2 years. Maybe it goes on for 2.5 years. I'm not trying to play Nostradamus right now. But what I am saying is these are the opportunities that we wait for. So sitting in cash right now may not be a bad idea, but at the same time, not having exposure to an asset that is known to do 4x, 5x, 10x, 20x of what traditional markets do, and also with the knowledge of knowing that the Fed has to eventually pivot at some point or else risk a devastating potential collapse of the US economy, which I highly doubt they're going to let that happen. As I stated, 60% of these global businesses are in fact US businesses, right? Then you should be salivating right now when you see these prices go down. You should realize that the lower these prices go, the better the opportunity is, right? If you went to a grocery store and your favorite item was half off, would you come back tomorrow and buy it when it was full price? No. And there's a lot of people that are waiting for the bottom, right? The official bottom. Who knows where that might be, right? But let's say Bitcoin does take another 50% dive from these levels, right? That would bring us down to around that 10,000K level. Well, if you actually apply percentages to that, that still is only around an 85% drop. So we're down 70% right now. And people are already having the opportunity to get crypto and Bitcoin at a 70% discount, but we're going to wait for that extra 15%, right? Well, what happens if you come back to the store the next day and the item is sold out? What if you can't get your hands on it? What if demand starts skyrocketing and then price is even higher than the original price that you had anticipated or the price that you were waiting at, right? Well, that's the situation that we're at right now, guys. I just wanted to bring you this positive video, kind of just get away from the charts for a second, break things down into perspective. The opportunities are there. The data is there. You can't say this time is different. We've been going through recessions and depressions, and we've had 26 bulls and 26 bears, okay? And Bitcoin's only been around for 13 years of that. And we know that Bitcoin, although speculative, has a massive history of, yes, getting hit harder on the downside, that's for sure, but making massive exponential gains to the upside. So to ignore the opportunity right now that's ahead of us, to just walk away, to give up, to be upset maybe because you bought a little bit high, well, That's where those life lessons come from, right? And you will become a better investor. You will become smarter over time. But don't become discouraged because of what they're saying and what they're doing right now. And don't believe them when they say that this is the ultimate doom and gloom. This is the end of the world. Guys, these billionaires, these gurus, they want your money. They want you to panic sell so that they can scoop it up for cheap. Bitcoin was the first opportunity that retail actually could get in before the institutions, right? We actually front ran those guys. They don't like that. They want your Bitcoin. BlackRock wants your Bitcoin. Now, I'm not saying you should sell everything, and I'm not saying you should buy everything now. This is not about risk management. We've made other videos about that. But what I am saying is don't pass up a potential opportunity of a lifetime because you're scared of what might happen, or you're feeding into this fear mongering that the mainstream media and these super ultra high net worth individuals are feeding you guys, okay? I promise you, it will be all right. And if you can stick it out, play your cards right, work a little, maybe, try to, get a side hustle, put in some extra, job, maybe even cut some costs, maybe don't go spending the crazy money on the shirts or dinner or clothes or cars or whatever it is. Bunker down like I did for 2 years, riding a bicycle, throwing everything I had into Bitcoin. Not saying you should do that. Be responsible with your money, but just realize that the opportunity is upon us and the time may actually just be right now. So that's all I wanted to say to you guys. I hope you're having a great day. Tomorrow, we're going to get back to charts. We're going to talk about everything. I'll let you guys know. We have some serious levels coming up, but I just wanted to bring you guys this video. I love you. You guys are awesome. You're the reason that I make these videos. And of course, if you guys do want to trade, make sure that you check out the tutorials popping up over here, right now. Until next time, stay crypto. And of course, peace out.